Hey there everyone, it's Joe from Ainslie's Gold Silver Standard Insights, brought to you by goldsilverstandard.com and ainslieBullion.com.au. Today's topic is Federal Reserve is in a tough spot. Now that's posted on the Ainslie website. I'll put a link below for you to follow along. And of course we have Chris Tipper here to break down the morning's news. And joining Chris today is Alex Hutchinson from Siltech Precious Metals. So Chris and Alex, over to you.
Thanks, Joe. The market was sent back into volatility and uncertainty on Friday night after the release of the latest non-farm payrolls employment numbers out of the US. The main thing holding up the Fed from slowing down the pace of rate rises was the expectation of unemployment increasing and slowing the economy down. But the numbers surprised the upside, with jobs still being created at a solid pace. Probably even more significantly, though, wages increased sharply, which is great for employees, but is not what you want to see if you're the Fed counting on workers not being able to continue to afford to spend if you want inflation to fall. Joining us today to make all of this hopefully make sense, we welcome back Alex. So welcome back, Alex.
Thanks for having me again, Chris.
Let's dig into this because to me, it was a little bit of a surprise. Like I have been expecting to see a greater uptick in those unemployment numbers, and it just wasn't there. So what did you take? What was your take on all of this? I thought it was a pretty big miss in terms of the data. What did you see there?
Well, I mean, ultimately it was a huge miss what has happened. The consensus from the Bloomberg survey on economists was that the jobs would be around 200,000 and it came in at 263,000. That is within some margin of error with what's been going on. But the biggest one from Friday was the huge growth in wages. So economists were expecting around 2.6% per annum, so well under inflation and really stripping out that purchasing power. You're talking away from people, but it's come in at 5.1%, which is nearly double what they were expecting. So you still had the participation rate dropping. So that's gone down now to 62, I'm going to get this wrong, 62.1%. And so you've still got that going on, but then you've got this massive wage growth that no one was expecting. And, you know, Powell and all of the Federal Reserve Board just keep talking about it's going to happen. Wages are going to drop. CPI is dropping. This is dropping. Everything's dropping. Wages are going to happen. But it's the last bit of data we need before we can stop these huge rate rises. And Friday was huge. So there's a lot of economists now saying a long way to go before the tightening can be stopped.
And that was my sort of take on it as well, that they'd made it quite clear, and I actually felt in the lead up to that non-farm payrolls or those numbers that they were making it quite, or they were giving the market the expectation that they were intending on slowing down quite significantly. So that feels like it caught everyone by surprise. Do you think what's actually driving that? Do you think that that's going to continue, or was this just an anomaly? Like, is it something that, okay, yep, we got that one final little ticker, but now everything will go back the way that the Fed was expecting, like you were just describing. Is that how you see it, or is there something more at play here?
Well, I mean, I'll do a comparison in a second between Australia, New Zealand, and the US. But just looking at the US to start with, the participation rate just keeps going down. What was interesting about this one was people in the age group 25 to 59 are still leaving the workforce. So the participation rate in that area is still dropping. Then you've got the retirees. The news sort of spoke today about a lot of people during COVID left the workforce that were close to retirement, and they're just not going to come back. So that participation rate from them is not going to uptick. And then you've also, so you've got then women in the actual age group that do work now leaving the workforce. So participation rate does not look amazing.
I have to wonder how that's sustainable, though, because some of those people surely will end up needing to come back to work. Like, where are they finding their income from?
Well, I mean, we spoke about the China thing last week, and a lot of the quitting thing that went on before. A lot of people are just utterly disillusioned by what's been going on, and people don't care so much. So, you don't get nice new sweater one week, but you're working 5 hours less. I don't think people care as much anymore. And I just don't, I think after COVID, people are tired and they're not as excited to get back to work. So I can't see that upticking. What, then you've also got the immigration issue, which we've spoken about in New Zealand, which I did some comparisons just on how long it takes to do a visa and what the wage growth has been. So in Australia, it takes about 90 days now to get a working visa. And Albanese had his big policy back in about June and July, where they talked about just opening up for about 200,000 employees. Well, our wage growth has sat around 3.1% since that. Now, looking at New Zealand, they're actually at 8.8% wage growth for this year, which is actually above their inflation level of 7.1%. But their visas are taking up to 24 months to process. So they've just got no one coming in. And then actually sitting in the middle of that is the US. So the US is taking about 12 months for a work visa to be processed, and their wage inflation's at 5.1%. So really, if you look at those numbers, maybe immigration is a much bigger policy issue than people are looking at, especially with the boomer generation coming to the end. They're saying 2030, all boomers are 65. That's it. 2034 in the US, there are less children than there are retirees. So it's just going to be exacerbated without either immigration policies, women back to work policies, or more children. So
I think you've answered a little bit of what was confusing me in that explanation there around immigration, because that's probably why these numbers are so confusing and why I was getting confused before to say, well, how can these people not work? It's probably always been that way. It's just we've had the flow of new immigrants coming in to replace those workers in those jobs when we've had other periods of people, for whatever reason, leaving the workforce. That's effectively what you're saying, isn't it?
That is. So New Zealand generally has had pretty good immigration policies. They just haven't since COVID. So their participation rate's at about 71%. Australia's been pretty strong for immigration. We're around 66%. The US is at 62%. Now, their immigration policy really hasn't been changed since the Reagan era of 1986. So they're 30 years behind where everyone else is on immigration. And we've now got the Senate and the House, Republicans and Democrats. Nothing's going to change quickly. So the pressure is not going away. In the news today, we also looked at a report from DeSalle, which is a recruitment company over in the US. They're saying that last year, about 65% of firms saying they were going to hire. This year, for 2023, they're saying 85%. But what's really interesting is 50% of firms want to hire salespeople. Surely that's got to be a fairly strong leading indicator of them expecting sales to keep going.
That's right, because that's not the first person you would hire. That's further down the track. You've already got your product ready to go. You've already established your marketing. If you're hiring a salesperson, that, like you say, is a leading indicator of we're ready to kick off and we're ready to expand the business. It's not about slowing at all, is it?
Doesn't seem to be. And really, you start looking at some of the policies and looking at what's going on, and Powell actually got up and started saying the other day, hey, government, immigration policy, can we start looking at it? They know where this is, where the constraint is. They keep talking about it, but the Fed is not the government and the government is not the Fed. So that's where it is.
Fascinating. Well, I'd like to just pivot a little bit from here, because obviously a lot of our viewers will be interested to know what's going on with gold and silver in this context, because there was some really quite interesting price action on the back of that data, where we saw prices go down, then up, and it's quite confusing. And we've actually had a few questions around this as well to know what's going on here, because sometimes it's like bad news is good for the metal. Sometimes good news is good for the metal. Can you give us a bit of an overview of your take on what happened, first of all, from Friday till now, sort of with the gold and silver price, but also how you interpret the bigger picture of what's going on here and what that's likely to do to the metal prices?
So I always watch platinum and silver, platinum before silver, as leading indicators on metal. I actually haven't looked at platinum, so I won't do that now. But gold, on the back of the announcement, dropped from, I think it was around 1804, and it dropped to 1778. And then in the aftermarket stopped at 1794. But then today it's back up to 1806. So basically what's happened is everyone went, bad news for metals, and it's dropped to 1778. And then people have gone, actually, metals are strong. So and then silver, which is a really good indicator of the strength of a market. So normally in a bull market, silver leads gold. Silver dropped from 22.6 down to 22.3-ish. And today, I mean, last time I looked, it was at 23.4. So good news is good news, bad news is good news, I suspect, for metals at the moment. So they're pretty strong. And you know, looking at the Aussie to New Zealand, well, the Aussie is weakening against the New Zealand dollar. It's strengthening against the US dollar. And that's what we were talking about before, with those having the issues with inflation from wages. Well, Australia doesn't have that, which may hold the dollar back a bit and may therefore really support metals in Aussie dollars at the moment. So that's the way I see it. But yeah, you know what? I'm going to quickly check platinum, but silver has nearly bounced $1 on the back of what should be bad news. Oh no, platinum's not up as much, but just silver today. And so it'll be interesting to see if it holds on the good news and holds on the bad news. Because I mean,
that could be the start of a
an ounce.
narrative shift, couldn't it? That really it's decoupling, like the metals might be decoupling a bit here from, we just get a newsprint and it automatically does what we would expect, to it's standing on its own 2 feet.
Yeah, well, I mean, you've had the crypto market put a bit of wind in, I guess, gold and silver lately. Yep. So you've got that support as well. So we'll see which way it goes, but it's pretty healthy.
Yeah, no, I agree. And it was a bit confusing, but I think when you zoom out a bit too on those charts, there's some pretty good looking patterns setting up longer term that might really see breakout potential. And we don't know, it could be bad news that drives it, or it could be good news. So it might be time to actually step away a little bit from trying to interpret the news on every little move and look at the bigger setups, because often these things play out regardless of what the news does.
Yeah, absolutely.
All right. Well, this is actually our last insights with you for this year. So we're finishing up on Wednesday, so I have one more coming. But thank you very much for everything that you've put into this year, and the news and insight that you've provided. So hopefully you have a great break, and we'll catch up with you again next year to see where we are after the break.
Looking forward to it, Chris.
All right. Thanks, Alex.
Thanks. Bye.
Thanks so much for being on the show once again, Alex and Chris. I'll see you on the next one. And of course, to the audience, I want you to head over to the Discord channel. That's discord.gg/gold. The perfect way to continue the conversation. Alex and Chris will be there for the next 1 or 2 hours after the upload of this video. So head over there, ask your questions, get a response, and tell us your feedback. We really want to hear from you. I always want you to subscribe to the YouTube channel. That's youtube.com/Ainslie Bullion for the wide range of informational videos that we post 5 days a week, including specials and much, much more. And while you're on the internet, head over to goldsilverstandard.com, because that's bringing gold and silver into the digital world. As we say here at the end, balance your wealth in an unbalanced world. Take care, and we'll see you next time.